What up, Hyperchange? Welcome to another episode of the podcast. Have something super special lined up today. I'm incredibly excited to have Gene Munster on the line. He worked for Piper Jaffray for a number of years, covering technology companies, was a huge fan of his research there, now has founded a company called Loop Ventures. And so Gene, I'm really excited to have you on the podcast. Thanks for coming on.
Thank you, Gally. It's an honor to be here.
Yeah. And so, I'm a big fan of what you're doing with Loop because you guys publicly make available a ton of awesome research. And I think, that's really a great thing for people who are young and are trying to learn and are trying to get involved. And I also think it's an amazing business strategy to market your firm. So I just wanted to give you a shout out for that. And I think everyone should follow Loop Ventures. And so I thought maybe we could start by you explaining a little bit about your investing journey, how your career began and how you got to starting Loop Ventures.
So I'm old. I'm 47 years old, and I got into equity research just out of college, kind of in the mid-90s, covering broader tech, software, companies like Adobe, Autodesk, Microsoft. And then kind of right around 2000, started to see a shift in some of these big tech companies having ambitions outside of what traditionally has been the tech world. And we decided to pick up Apple, which at the time was covered by hardware analysts, and so we were the first non-hardware analyst, in part based on the iPod and a belief that could be a bigger part of their business. Ultimately, where it led to was much bigger than what we anticipated back in 2004. But we kind of evolved around that thread of kind of ambitions, tech companies and media, and covered other internet companies like Google and Amazon and Facebook, and did that for a long time up until about a year and a half ago, decided with the team that I worked with for the past 10 years, the research team, to leave Piper Jaffray and start Loop Ventures. And we're a research-driven venture capital firm, which means that at our core, we continue to love to do research. I appreciate what you said about our research. We've expanded the team. We now have 8 people. Back at our Piper days, it was 3 people, so we have ability to cover more topics and have enjoyed the luxury of kind of expanding our focus. Tesla's a company, interestingly, that I've wanted to cover for years at Piper, but was not allowed to do that because as what was perceived as an internet/Apple analyst, it didn't make sense to, at least that was the conventional wisdom on the street, it did not make sense that a tech person cover an automotive. So that's one of the nicest parts about being here at Loop Ventures is we can really pursue what Tesla is doing and love the work that you're doing. You're really setting a new bar that people like us at Loop Ventures are really striving for. So great work, Gally.
Awesome. Thank you. And that's a great segue. So, I've always thought that Tesla is the Apple of the auto world. We're seeing sort of like a perfectionist product design, software first, reinventing what the car is. And I know they're burning a ton of capital now, but at least I'm of the theory that in the long term at maturity, they could see sort of like Apple-esque industry leading margins. So I'm curious, maybe you could give us a high level overview of, is this the Apple of the auto world? Is that sort of the thesis you're undergoing, or what similarities or what differences do you see in those two stories?
Very similar, very transformative technologies have a big opportunity to also raise the margin profile. I think this a concept that Tesla is an automotive company is really a fallacy. This is really a computer on wheels, and computer not only in the sense of electric, but also in the sense of autonomy. It's very similar to what we saw with the iPhone, is that a lot of people viewed that initially as just a phone, but in fact it was a computer in your pocket. And the richness of the smartphone is really about what's happened around the app and being able to drive different experiences from it, not just make a phone call or surf the internet. And so I think that there are a ton of analogies that can be drawn between the two. And maybe even the most important part is just the user experience. When people first started to get iPhones, they were passionate about it and would just go and evangelize that. I'm not a Tesla owner. I hope to someday be one. But you see the same kind of evangelism with Tesla owners, that they feel that this product is so good that they want to go out and tell the world. That is a critical piece to understanding when things are transformative, is when you have this energized base that's willing to evangelize a product. And so those are kind of some of the similarities that we see between the Tesla story in the future and what we learned about Apple, in particular about industries that are being transformed.
Awesome. And you mentioned something about the App Store that I think is fascinating. So I kind of have this theory that even if Tesla just sold all its vehicle hardware at 0% margin, in the long term, the time in the car spent, maybe they could take like sort of a Tesla App Store type of thing. So I'm curious if you have any thoughts on how that could evolve. Maybe you say like, Tesla, take me to dinner here, and it drives you there. And because it was the lead gen for that dinner, they get a cut. Maybe music. They could actually start taking away some of those interactions that happen on iOS devices if you're doing those same things in the car. So I'm curious, what do you think about the software sort of upside to the margin of Tesla's story?
A grossly underappreciated asset of the Tesla story is what's happening on the software side. And that really encompasses everything from the supercharging network to the maps to what they're going to do in music, but also this concept of other apps that can be built on top of it, actually a platform. And I think that this is something that only really you have been talking about, and I think it's an important opportunity. If you look at the profitability on this would be pure margin type of profit. Call it, they would take roughly 30% if they do, in fact, do some sort of an app store. I believe that Tesla will eventually do an app store, and how big could this be? It's going to be probably in terms of absolute revenue would be relatively small, but it will be highly profitable revenue. And yes, that's going to steal from some of the revenue that is going into right now some iOS and Android. I think other pieces that can kind of play into that is around content in the car. And is there opportunities? So for example, if you have a Netflix subscription and you think about a full autonomy, maybe that's $12 at home, but if you want to add your Tesla to that, it's $14 a month, something like that. So there are some incremental upsells that existing app developers can do by developing on top of a Tesla platform. But this is really an important piece to I think the longer term, or an underappreciated piece, I should say, to the longer term profitability, which really at the core of this is understanding that cars are computers on wheels.
Definitely. And you have a fascinating analogy where you talk about Tesla as an energy capturing company, an energy storage company, and then an energy consumption company. And they're sort of tackling that whole ecosystem. And so I love that analogy. And that's one thing that I think about Tesla. They get lumped in as a car company, but that is just sort of the first use case of their battery technology. And I believe as their batteries get cheaper, they start to have a more and more impact on the grid, what we're seeing with the semi truck. So I'd sort of like to go on some moonshots here. Like what kind of future industries that people aren't talking about, like trucks, will Tesla be able to disrupt that are consuming energy as their battery prices fall?
Yeah, I mean, if you just think about anything that's moving could potentially be disrupted. And the moonshot things is potentially using some of these batteries and some of what their expertise is in SpaceX, and even potentially impacting aviation. Initially drones, but over the long term, you could see opportunities where as the efficiencies and the yields on these batteries improve, that could actually power an airplane, for example. So that's the moonshot, but stuff that is more likely in the near term is, their roadmap right now, they have 3 vehicles. The next 5 years, they're going to have 7, as you mentioned, the semi is part of that. So that's part of the roadmap is, the pickup truck, for example, the battery requirements on that are going to be a little bit different than on a Model 3. But you can even take it to the next level in terms of, if you think about infrastructure and distribution, what happens when trucks are the yards that are used at distribution centers. I don't know if you've seen behind the fences all these trucks behind there that are loading up, for example, outside of an Amazon fulfillment center. There's this massive piece that is really below the fold that I think Tesla could also disrupt with their battery and their autonomy technology. And so we're just scratching the surface with passenger cars, but more broadly think of the automation curve is going to be steep, impact a lot of different areas, and they'll need both intelligence, AI, and the neural networks that Tesla's working on, and separately they're going to need batteries to empower that. So could even be batteries to empower robots around the home. So it's a massive opportunity that gets totally missed as people hyper focus on Model 3 production in a given week.
Yeah, fascinating. And so one thing that I often struggle with Tesla as a shareholder is, do I think about this as a company that's selling cars that will, let's say, have 10% EBIT margin on product sales, and that's going to drive the value of the company in the long term? Or is these car sales just sort of subsidizing R&D funding for an autonomous taxi network, and that is where the value will be generated? And sort of, I guess, the crux of this debate is like what I'm calling the Model 2, the theoretical compact car that would be even cheaper than the Model 3. And I think that maybe that comes in 5 years, which begs the question, is that, in segment like the Honda Accord, the Camry, those are selling millions of cars per year. The Model 2 could totally disrupt that, or will we not even be seeing vehicle sales in 5 years because it'll be all autonomous taxi networks? And so I guess either way could be a huge bull case for Tesla, but I'm curious sort of how you balance those two bull theses.
I think this idea of if you're under 30 years old that you really want a car is obviously fading quickly. And so I see that the bigger opportunity is kind of in this $35,000 to $45,000 range, not the sub $35,000, and separately building a network. Basically a ride-sharing network, and this would be transportation as a service. All the major automotive companies are talking about it. Tesla is the best position to be able to do that, given what they've done around some of the advances that they've had with autopilot, and I think where they are in terms of autonomy. But I think that, yes, I think that, like you talked about, this lower-priced version would get a lot of interest, I think, from investors and the press alike, but I think that as far as the substance of the model is that how people are moving is changing. And if you look back to my generation, there was aspirations to have certain types of cars. Now your aspiration is to be able to travel efficiently at a low cost. And so there is this piece that there's still going to be a market for car ownership because there is some, if you think a classic, once you start to have a family, there's some value in having your stuff in your car, and I don't think that changes. But this kind of mainstream price point around a smaller car, I think is an important piece, but I think the bigger opportunity is around the fleet. It does beg the question of your car working for you during the day. So if you go to work and then you turn your car over to the fleet, how many people actually are going to want that? Because inevitably there's going to be some damage to your car and it might get messy. So there's a lot that still needs to be worked out. But more broadly, transportation as a service, what we've seen from Lyft and Uber to date is small compared to what it's going to be in 10 years.
Fascinating. And so I hate to address this, but this is really the elephant in the room, is the privatization of Tesla. So we'll only spend a couple of minutes on it because I sometimes get frustrated that people are talking about the privatization instead of all the exciting things going on with the company. But I personally am just like sort of in a catch-22 because I just don't see a strong reason to go private. I believe Amazon and Netflix have validated that you can think long-term and be public. That whole saying, you can hold a rock concert or a ballet, you just need to advertise it correctly. So I just don't buy that media skepticism and like shorts are a good reason to go private, especially because I think a lot of the skepticism in the media was because of missed Model 3 targets and like Elon's Twitter. So I think a lot of the skepticism and sort of controversy around Tesla is self-inflicted. And so I just don't, I feel like this going private thing is just a big distraction. And so I don't know, I just can't feel like there's a clear reason for it. And 420 seems like kind of a low price because we're right almost at the Amazon moment. If Tesla can go cash flow positive here or start taking away some of its reliance on external funding, then I think, and they can deliver profitability in Q3 and Q4, the Model 3 is amazing. Like I think the stock's going way higher than 420. That is the short burn. All they need to do is just put their head down and execute. But then on the flip side, I'm thinking maybe really long term, Elon wants to do crazier things. SpaceX, Boring Company, Tesla being private just makes it way more flexible to integrate with his empire. So I wonder if that's one of the undercurrents and that's really the only reason that convinces me it's a good idea. But yeah, so I'm just curious, what are your thoughts? You said there's a better chance or a higher than 50% chance that Tesla does indeed go private, but do you think it's a good idea? If you had a 30-second elevator pitch to Elon Musk, what would you say?
I think it's the right thing to do. Agree that it's a sideshow. It misses the bigger story, which is the fundamentals of Tesla improving, and the value of the story is going to go up whether it's public or private. But this company more uniquely is positioned to be private because they can make better decisions for the long term. I'll give you one example, is that the best thing for Tesla to do is not to build 5,000 plus Model 3s per week, but actually build no Model 3s per week and just hyper focus on building a manufacturing line that is going to be exponentially faster than anything we've seen in automotive and turn on the line 6 months from now at 10,000 vehicles. That is something that public investors will not tolerate. Second, just really quick, I think where it really starts to wear on the company is when this negativity impacts order conversion. So they've got 400,000 plus, they've talked about pre-orders or reservations and converting those to actual orders. I think has been impacted by some of the negativity out there that is generated by people who don't believe in the story. And so to remove that actually would be a measurable positive impact on the story. Very unique set of circumstances. Agree it's a sideshow, but I think the best thing for Tesla is in fact to be private.
Awesome. And moving on to Amazon, because we could talk about Tesla all day, but I think there's so many other exciting companies. You've been following Amazon for a while. I'm just curious, like maybe you want to fill us in a little bit of history of how long you've been following the company and just like a couple high level thoughts about Amazon.
Yes, I picked up Amazon in 2010, so it hasn't been, I guess, that long. But at the time, the story had kind of gone from $30 to $60, and I remember when we had upgraded. We've gotten a lot of stocks wrong, but we got Amazon right. When we had upgraded at the time, the headline of the note was late to the party, but party's not over. And I think what really stuck out to me as we kind of rewind the last 8 years is the company's just appetite to go and to transform easily, or industries that should be transformed. And they obviously started in commerce, got into cloud. Now they're starting to dabble within media, healthcare, potentially even robots. So it is a great example. This is an example of a company that probably should be private, but has been able to navigate that because of just there isn't this negative thread that negatively impacts the business like we just talked about with Tesla. But that's kind of the background on the Amazon story. I would point out one piece is that where investors got this wrong for 5 years is they kept comparing Amazon to a retailer. And really what it is a company that's disrupting industries, and it has a high growth rate because of that. And so it was essentially a trap. Sometimes you should look at valuation, but in this case, it would have given you an answer not to invest when you see very powerful visionaries that have the capital to really disrupt an industry. That's usually a signal that it makes sense to own a story, and that's been the case of Amazon over the last 8 years.
Okay, and really quick, I want to push back because you said Amazon should be private, and so it seems like Amazon is working out beautifully as a public company. They're doing everything they want. In my opinion, liquidity and transparency in financial markets. We're in the permanently connected digital age. Like that's inevitably where things are headed, or should be more transparency, more liquidity. In some ways, it seems like going private to hide from the skepticism instead of like fighting it. I just don't, is this an end game where the media just can't understand companies that are public, so everything that's disruptive should stay private, and then small investors can't access those companies?
Yeah. Let me put a finer point on it. What I was trying to say is that I think a story like Amazon would make sense to be private for all the factors of them trying to disrupt. But in fact, this story has worked really well as a public company, in part because they haven't had the negative perception that has impacted, some of the things that we've seen with Tesla, the negativity around it. And second is a very understandable investor base that believes kind of in the long term. I think so. I think the best thing, in all things equal, I would rather these companies be public. Selfishly, I would rather them be public because I think it just adds, there's an intellectual stimulus that I get from being able to look at some of the public filings and really dig into these companies. I think Amazon has done a wonderful job of operating like a private company, but also being able to access the capital markets. They are the signature case of how to do it and remain public.
And an interesting piece of Amazon's business model that I think gets not enough love from Wall Street, but is potentially one of the most exciting things, I would argue a better acquisition than Whole Foods potentially, is Twitch. Esports is such a fascinating area. We're seeing influencers come up. It's becoming more popular than baseball. I just think this is a behemoth in the making, and Amazon owning Twitch seems to be the platform where this is all going down. So do you have any, thoughts on the esports market and Amazon's role there?
Big believers in esports. I guess in some ways, how can you not be agree it's an underappreciated asset amongst Amazon owners. We've gone back and tried to put some loose value around Twitch and think this could be, if it sells a standalone business today, it would be $100 plus billion dollars, just given the opportunity that it has in front of it. And so, you kind of think about that more broadly. It's kind of 10, 12% of the value it should be of Amazon. I think today investors probably assign, if they said Twitch was going to go away, the stock probably wouldn't do much. So maybe they assign almost no value to it. But as you and your viewers know very well, is that this talk about just seismic changes in how we consume media. I think Twitch is right there at that vortex, and I think it's exciting to think about what's going to happen around sports. It's an area that we cover very closely, even down to the high school level, seeing how they're starting to embrace esports, and can't tell you how we're hoping to make some investments in the space to try to grab some of that big wave. But would agree with you is that grossly underappreciated asset in Twitch, and inevitably it will get more love from investors in the next several years.
Yeah, and potentially an even more exciting than $100 billion business within Amazon is what they're doing with healthcare, because that is a problem. As someone who's 25 and trying to get insurance and dealing with all this, the system just seems like a mess. And the program that they're rolling out with JP Morgan, Berkshire, for their own employees seems like a no-brainer that if they perfect that, they'll roll that out as a service, Prime Health. So I'm curious, how do you see Amazon making this move into healthcare? How does the acquisition of PillPack tie in?
I probably got more bad news than good news on that front. Agree that this is an area that they will disrupt, and I think it's probably going to be more along the kind of on the retail side, the fulfillment side, around getting different kind of level one supplies. Think of braces and bandages, things like that. PillPack gets them into potentially the pharma market, which increases that. As far as really changing the price of healthcare and the dynamics, and when we first saw the Berkshire Hathaway, JP Morgan, Amazon announcement at the beginning of the year, we thought this really could be something that could start to change the center of power around how healthcare is provided, and start to eradicate some of these costs and provide more affordable healthcare. I think that my initial take on that was probably ambitious. As we have kind of followed how that is going and our insights from people who are closer to that, it just seems more like an experiment right now of them trying to lower their own healthcare costs versus provide a platform that can be kind of used by other companies to provide lower healthcare. And so Amazon's going to do more in healthcare. I want to be clear about that, but kind of their ability in the next decade to provide more affordable healthcare for all of us is little.
Interesting. And so Bezos has this really interesting plan. I was reading his biography, or The Everything Store, and in his valedictorian speech in high school, he talked about industrializing space and making the earth a nature reserve. So I wonder, Amazon's patented floating warehouses, like Bezos, unlike Musk, is very closed about what his long-term vision is for the company. And so the more and more I think about it, Amazon invests in renewable energy. I think he understands the world needs to go green. Is that the end goal of Amazon? Are all their warehouses going to be in space in 50 years? I'm curious how you tie in Bezos' sort of personal life mission with what Amazon is doing.
So, it's fun to compare the two, Musk and Bezos, and because they both are really disruptive and separately love Mars. And so I think that in the case of Amazon, I think that, their mission statement of kind of sell everything, and I think it's more about that. It's more about building commerce. I think that there are things that they want to do to be good to the planet, and you gave some examples of that. But ultimately, I think of the center of gravity of Amazon is going to be find new ways to grab new parts of your wallet, whether it's the grocery segment through Amazon Fresh for many years and now Whole Foods, or some of the healthcare stuff that we just talked about on the content piece with Twitch. I see that as more, I think that they will do good things around how they're trying to deploy capital to be more environmental friendly, but I think that that's going to be a much smaller part of the story, which is different, not to bring it back to Tesla, but I think that Elon Musk, in fact, does really want to do good for the planet, and their mission statement would say as much.
Yeah, and so moving on to Apple, you've talked about Apple's move into augmented reality glasses as sort of potentially the next paradigm for the smartphone. And so this is one of the reasons I'm really fascinated by Snapchat is what they're doing with spectacles seems to sort of be getting ahead of that curve. So I've always thought is Snap an acquisition candidate for Apple, and what do you think about Apple's glasses plans?
I'm a believer in AR wearables, and I think that right now everything we've seen would say don't believe in that. We've seen Microsoft HoloLens, which is a 40-degree view, very limited. We have waited a long time for Magic Leap, and I think that it's good what they've come out with, but still doesn't really capture the full opportunity around a wearable. Apple's made some acquisitions in the space, and Tim Cook has been emphatic that AR is the next paradigm. When you have the kind of capital that Apple has, the track record that they have in terms of issuing in new paradigms, and the ambition from the top, it's pretty clear that Apple will have some form of a wearable. Now, what the value on that and how that really changes our lives is open-ended, similar to how the phone was with the App Store. But there is a lot of substance that can come with a full-degree view around industry and being able to just subtly bring out data and everything around us, whether it's locations, remembering someone's name, being able to have an expert come in. I happen to be a handyman, and inevitably I watch a lot of YouTube video to try to figure stuff out, but it'd be nice when I'm trying to install a heater to have an electrician there along with me to make sure that I'm doing everything correctly. So can't say enough about the big opportunity around this, around AR wearables. As far as the timing, Gally, when this is going to come out, that is still, our best guess is 2020, but that's just a guess at this point.
What do you look for in an investment for Loop Ventures? Like, how do you analyze an investment?
So the first thing, like any VC would say, is we look for great founders, people who are willing to have a big vision and who are willing to suffer. We talk about a 5-year commitment to suffering. We're also a startup at Loop Ventures, and so we every day live this suffering mantra. It sounds horrible, but it actually is a lot of fun. And so that's kind of the first piece we look for. The second is culture, and I think one of the things that surprises me most is when we talk to prospective companies about culture, how often we hear the comment, no other VC has asked us about culture, which really surprises me because VCs tend to put a lot of importance on the founder, but I think miss a big piece around culture. I think if you have culture, just like any team, you can really redefine the world. And so the ability, we ask a lot of questions around culture. And then the last piece is we generally like ideas that are kind of crazy. I think if you have a business that comes to us that makes a ton of sense, that's probably something that we're not going to do. We want to make investments in Airbnb when it sounded strange to have strangers in your home, or Uber with the idea who's going to want a black car service. It's those kind of really disruptive things that we shoot for. So we have about 15 portfolio companies, but this company called Bumblebee Spaces. But essentially what they do is they take your ceiling and add AI and robotics to it. So think of a small home in a major city. There's more walkability. People are valuing walkability, but also to get walkability and to move into some of these urban areas, the cost of living is just too expensive. So you end up being a smaller and smaller home. In this case, they can take call it a 100 square foot home and put a bed in the ceiling, a table, your closets, a nightstand, a couch, and it's all hidden out of view. And then when it's time for bed, you say it's bedtime and your bed will come down. And during the day, you say, I want to watch TV, and a love seat comes down and maybe a side table. And then it uses AI to store things. So when you put it into one of the storage bins, it remembers what it is. And so you never have to forget where you left your sunglasses. So I think Bumblebee Spaces is one of those crazy ideas that is going to change how people think about real estate, from square feet today to cubic feet in the future.
Wow, that is so cool. And that's called Bumblebee? I'll have to look that one up.
Yep, Bumblebee.
Awesome. And so I'm curious, I kind of want to open the floor to you, Tesla, Amazon. Is there anything that Apple, Google gets you excited, new trends or sort of disruptive businesses within these tech conglomerates people aren't paying attention to?
I think the one piece that we haven't talked about is what Apple's ambitions are in automotive, and it is still still largely unclear in automotive and autonomy. This is a dangerous topic for me. I still have 5 years left of my I would say my rehabilitation for expecting that Apple would come out with a TV, a new product category. In fact, they never did that. So I need to be careful about how we talk about these new untested or unflushed out product categories. But their recent rehire, if you will, of Field that can help them, I think on the manufacturing side, the announcement that they've had or the suspicion around what they're doing with Volkswagen, what they have tried with Titan and failed. It just seems like this is a very big opportunity for Apple. I always come back, it'd be wonderful if Apple and Tesla came together, and we generally think of that, by the way, as a fairy tale because both companies love design, and Elon Musk will not give up design to Apple, and Apple will not go into a partnership without the ability to have design. So unfortunately, that's off the table. But I think the good news is this is one aspect of the Apple story that is really underappreciated. And as we think of the stock moving higher than $1 trillion, this has a potential to have a dramatic impact on how the company evolves.
And so what would you be looking for? Like the hire of Doug Fields was a big sign, so hiring more personnel. What sort of clues should we be looking for around Apple to get updates on the project?
Well, I think they've hired the right people. That's always a good thing to watch, hiring and separately the firing and who's getting let go and how big those teams are. If they're growing the team, that's obviously a sign of growing ambitions. But you can also kind of look, and a lot of times they operate under aliases, but licenses for them to operate autonomous vehicles in different states. Since they do use aliases, that may be difficult, but if you have some real good feet on the street type of research, you might be able to flesh out and see when they're testing different types of cars. That will still beg the question whether Apple's ambitions in autonomy are to actually build an Apple branded car or to have some sort of a service, transportation as a service of an offering. But that's kind of how we're thinking about trying to see what the direction is in the future.
Okay, and awesome. Last question I have you. So this is one part of Tesla's business model, tying it back to Tesla, that I also think doesn't get enough love is the batteries, what they're doing with the Gigafactory, and specifically the Australian project, how that has sort of validated what batteries can do for peak emissions in the grid. And then potentially this hint that we're getting about the 1.1 gigawatt hour project with PG&E. I totally, with Model 3, with the privatization, I feel like nobody's talking about the energy business, and this has been more validated than ever. So how are you thinking about that piece of Tesla?
I think that this could be a bigger piece than solar. Elon Musk has said that the solar piece scales better longer term and potentially could be bigger than the automotive piece. I tend to think that over time, auto is probably going to be the biggest piece, then batteries, then solar, something in that. But either way, you're right, is that it's important to talk about batteries and just when car manufacturers say that they're a car manufacturer and they can become an EV company, that's easy. To do it at scale is really hard, and that's what Tesla's doing, and the battery piece of it is a critical component to it. So I generally put that topic in this category and under this comment that Elon Musk had on the last earnings call, which is Tesla just has a really good product roadmap, and I can't think of a company that has a better product roadmap for the next 10 years than Tesla, with going from 3 to 7 electric cars, autonomy, what they're doing around solar and batteries. Put it together, it just seems like they've got a lot of powerful steps that they can take forward.
Agreed. Super, gonna be super exciting to watch all of this unfold, no doubt. Well, thank you so much for coming on the podcast, Gene. This was amazing. First time I've ever been nervous doing an interview, fully transparent, because I'm a huge fan of your research, and I hope you keep putting out, posts on Loop and doing interviews, because I look forward to every single one, and I just think it provides a ton of value to my subscribers that we have someone to follow and we can track their research, because I just think that makes us all smarter and improves the conversation. So thank you so much for coming on.
Thank you. Yeah, I guess it's officially the Mutual Admiration Society, because I feel the same way and about everything that you're doing there, and keep up the great work.
Awesome. Well, I hope we have you on again soon or sometime.
Thank you. Yep, looking forward to it. Thanks, Gally.
All right, Hyperchange. That wraps up this podcast of Sippin' and Schemin'. Thank you so much for tuning in. Please let me know what you think in the comments below. Would love to get all your thoughts on what Gene and I just discussed. Also, I want to give a huge shout out to Selena Ill Inc., who designed the thumbnail that you clicked on this video about. There's an awesome cartoon that she did. She is an amazing artist who's actually working on a coloring book of Elon Musk's tweets, funny enough. So you should definitely check that out. Big fan of her work and wanted to give her a shout out for doing the thumbnail art. Anyway, this is Hyperchange. I'll see you guys next time. Peace.